So for the past 4 weeks, the market has been going through a lot of turbulence and a major pullback. Bitcoin has not been doing well, so is Ethereum. There's been major pullbacks, and of course, by extension, BMNR. If we take a look at the charts right over here, BMNR has been down 40% over the past month alone. In today's video, I wanted to talk about why that is the reason and go over some of the major topics that's been going on. I'm not worried personally myself, and I'm still very bullish and optimistic about the future. Because I know we've been here before. Even in this current cycle, Bitcoin has already pulled back 3 times, more than 30%. There's been a bunch of 20% pullback, but this most recent pullback was the most severe, going from 126K in early October down to about $80,000 as of this week. And if we look at Ethereum, you could see that Ethereum has had even a bigger pullback with 3 major pullbacks, minus 38%, a very large 60% pullback back in January to April of this year with the Liberation Day tariff Armageddon, and then this recent pullback is roughly 45%. So you could see that these volatile assets, these crypto assets, Bitcoin and Ethereum, they continue to fluctuate a lot. And of course, BMNR, by extension, being a proxy to Ethereum, leveraged on top of Ethereum, is going to have a bigger swing. So in today's video, I just wanted to go over an update on BMNR, their current holdings, their Q4 earnings, and what it means, how I interpret their earnings, the recent price action on Ethereum and Bitcoin, and then we're going to talk about the major sell-off and the mechanics behind the sell-off, because I believe you have to understand what is happening in the market so that you can make the most informed decision. Then we're going to close it out talking about what BMNR is going to do this year and Ethereum, and then what I expect the price to be in the coming Q1 to Q4 of 2026. So for those of you who are new around here, my name is Colin. Welcome. What I do is I do fundamental analysis on crypto and stock projects that I believe have long-term value. Now, before I get started, remember that none of this is financial or investment advice. The crypto and the stock market are incredibly volatile. You can lose your money at any time, as you could see. Furthermore, I have nothing to sell you. This is not a sponsored video, and full disclosure, I own BMNR, I own ETH, I own BTC. Finally, if you're on Twitter X, give me a follow where I can tweet out information much faster than I can make these videos. So with that out of the way, let's get started. So jumping right into their balance sheet, this is an update as of November 24th. They have 3.6 million ETH, representing more than 3% of the total supply that's out there right now. Their BTC is still the same. They haven't sold anything at 192. The major change is their cash position. They're now up to 800 million, and you'll see why they held strategic cash. We'll talk about that later on. And then finally, their orbs position, their moonshot is about roughly 38 million. Altogether, the treasury is worth $11.2 billion as of today. And we can see that their velocity of accumulation of ETH is still rapid, still buying 26,000 ETH per day, starting from July until now. That represents almost $75 to $80 million of buying power each day. There's no treasury company that's out there that's buying that much every single day. And then you can see their $800 million position in terms of their cash would purchase roughly another 275 million ETH as of today's price of 2,900 per ETH. So a lot of you may wonder, where are they getting this 800 million from? Well, it's coming from ATMs, because BMNR is still one of the top 50 traded stock with $1.6 billion per day. That's how Tom and the crew is effectively able to build up this treasury of cash so that they can deploy it strategically when it's the right time to do so. And for the exact details, you can see from their PR and then also them announcing it on their Twitter as well. You can get all the details there. And I think another really crazy metrics that people overlook is the amount of ETH that Tom has been able to accumulate. He's only taken over as chairman roughly over 4 months ago, and they've accumulated 3% of all supply. Now, people don't give them enough credit for this, but they've accumulated more things than Strategy has in 4 or 5 years in less than 6 months' time. Now, the other key piece of information that came out from their 10Q filings is the number of shares. It's roughly 384 million that are outstanding. You can actually check for yourself. I'll link it below. If you take a look right over here and you go down to the bottom of the page, you can see as of November 20th, they have 384,067,823 shares. So we'll be using those numbers in order to do our calculation and analysis of BitMine today. So taking a quick peek at the numbers, right now they hold 3.6 million ETH. ETH has been trading between 2,900. We'll keep it at 2,800, giving them an ETH holding of 10.1 billion. The cash on hand, we said, is 800 million. BTC 16 million, Orbs is 38 million, the NAV is 11 billion. So if we look at the shares outstanding, yes, I know that there's a slight discrepancy from what's reported on November 20th and then a couple days later, but we're just going to use these numbers to keep things simple. Gives them a NAV of $28.70, an MNAV of about 1 if the market price was trading at $29.54. And then if you stake these at 3%, they'd be earning $300 million a year. We'll talk about staking later on in their earnings call, but keep these numbers in mind as we move forward. forward. So next up, let's get an update on their Q4 earnings and how I interpret the numbers, the dividends, and the staking going forward. So they reported a GAAP net income of $328 million, an EPS earnings per share of $13.39, and a dividend of 1 cent that they're declaring. So if you're new, you may not know, but basically these GAAP earnings don't mean anything because it's a mark to market, meaning what they're worth is basically the price of their crypto plus the cash they have on hand. They're not a traditional operating company and they're not a recurring cash flow company. So all of the traditional metrics like PE, they don't really mean anything. And things like EPS, they fluctuate really wildly with the price of Ethereum. And you can see the metrics that you should pay attention to is the ETH per share, their NAV, their MNAV, and how fast they're growing their each share. And then the 1 cent dividend. Now, let's be honest, nobody's owning BMNR to get a 1 cent dividend. That's more symbolic and more strategic for the future. So they declared this dividend on November 21st. That's when it's announced, it's approved. The ex-dividend dates, for those of you who are new, that's the date where you basically have to own the shares so that you can get the dividend. On December 8th, the record date, that's basically the company going through, checking that list, who's on there. And then finally on the 29th, that's when the payday pays out to those who own the shares before that date. And like I said, the 1 cent dividend is purely symbolic and strategic, putting them among some of the largest companies in the world, the Mag 7, the AI companies, and of course being one of the biggest DATs that's starting to pay a dividend, because in the future it will matter to some institutions that they're getting a dividend, and if that dividend is coming in ETH and it also has an increasing value to it, you could see it opens the doors to a lot of other players that could be holding on to BMNR shares. And we come right over here to the NASDAQ. We could see the institutional ownership has been up on BMNR. It's up to 23% now. You can see right over here, 355 holders have increased their position, whereas only 4 holders have decreased their position. And if we come down right over here, you can see some of the biggest name that holds BMNR. So Morgan Stanley, ARK Invest has been slowly, Kathy's been, DCAing, buying every time there's been a drop. You notice BlackRock, Jane Street, Citadel. You can see some of the biggest name, Vanguard, Pantera. And if you look down, you can see JP Morgan, you see Van Eck down here. The Bank of Montreal is from Canada. There's a lot of major players that continue to hold BMNR, and it becomes an institutional holding as it continues to grow. And then of course a major question was, what was BMNR doing with all of that ETH that it has? Now during their earnings call, they did announce this, that they are starting their Made in America validator network. Right now they're testing it with 3 groups right now and making sure that everything is secured, that it's safe. Because it's not just about yield. If you can't execute this in a secured, safe way, you won't be able to generate that yield for your holders. And then, of course, this is helping the Ethereum network. This is helping secure the Ethereum network as the network continues to grow. ETH has done nothing but continue to grow. And if you look back at some of my videos, you could see why ETH is doing very well. And a lot of institutions are gravitating towards it because they want something that is secured. And that's what BMNR is offering them. So bottom line is the Maven Made in America validator network that's coming in Q1 of 2026. It's going to make earnings even more attractive because there's now a yield. And like I said, it's very critical and important to safety and security of not just the staking and the yields, but also to the Ethereum network. So I welcome this and I look forward to BMNR staking starting in Q1. So the other helpful thing I thought BMNR did was they added a couple of team members to help Tom. It shouldn't just be a one-man show. You can see right over here, they added a bunch of people with a wealth of knowledge in the financial industry and then also digital assets as well. Chi Sang, who's coming in as the CEO, is quite impressive, has a good resume. But the thing that I like a lot is that they added Tom DeMark. So if you don't know who Tom is, he's the creator of the TD sequential indicator. What it does is it identifies trend exhaustion. So when we're deeply oversold or when we're deeply overbought, so you could see right here, he's worked with some major people like Steve Cohen, Paul Tudor Jones, John Burbank. All of these people are from hedge funds, IB. If you look at his past, there's a lot of people who have quoted Tom DeMark and how exceptional his indicator is able to help them. But the key thing is that he's coming in to help Tom identify those areas where he can buy or when it's overbought. So I think that's why they're holding on to that $800 million strategic position, is probably because Tom DeMark is guiding Tom Lee in terms of when to pull that trigger and when to buy. Let's talk about the recent pullback and the price action of both BTC and ETH. Before I get started, let me say one thing. Right now, in the next 10-15 years, there's no world where ETH will succeed or any other altcoin will succeed if BTC doesn't. So I see a lot of maxis on both sides, whether it's ETH, BTC, or Sol maxis. Everybody's fighting for their pot. Now, as Tom has always said, BTC and ETH can be friends. I hold BTC, I hold ETH. Right now, BTC is that ocean. I always describe it as the ocean, and everybody else, including ETH, is swimming in the ocean. So when the tide goes against you, you won't be able to beat the tide. With that said, the reason why I sleep easy at night and I don't panic, because a lot of people have been sending me messages panicking through the roof, is because fundamentally nothing has changed. The only thing that has changed is price movement, but fundamentally in terms of the macroeconomics, everything that's been happening in crypto in terms of adoption from institution, the progress of ETH, everything has remained intact. So when I sleep at night, I'm not being awoken and I'm not checking the price like 3 million times. I'm not as worried. So I'm going to break it down using stats, taking a look at the numbers so that you could see for yourself so that you can make an informed decision. So I started this at the beginning. Here's BTC from the last cycle, bottoming in 2022, starting to make its way up. Now there's been tons of 20% pullback, but like we said, there's been 30% pullback or more. And this recent pullback from sort of the October 6th, October 10th, all the way to November 20th, that was the most severe pullback. If you layer ETH on top of it, you could see right over here, ETH's had 3 pullback, 38%, about 60%, and then 45% during this most recent pullback. So when we look at them side by side, yes, every time BTC has a major pullback, ETH will pull back as well. And one thing I always tell people is understand the underlining that you're owning. So look at this picture right over here. ETH is incredibly volatile. So if you're owning BMNR, which is a leverage on top of ETH, you shouldn't be owning it if you can't stomach a 30-40% pullback or a 30-40% rise, which nobody is going to complain from. Just the other day, BMNR made a big move. Nobody complains from that. But when it goes down, everybody is quick to point out, oh, why is it going down so much? Well, it's leveraged on top of ETH. And ETH right now is still an incredibly volatile asset. Just back in January to April, it's pulled back 60%. And like I said, I don't believe any of the fundamentals haven't broken yet in terms of the uptrend. I still believe we're in a bull market with a major pullback, just like in the previous market. And if this is truly a bear market, this is the most mild bear market you're ever going to experience. So if we look at those recent ETH pullback, we can see right over here, back in 2024, in July to August, it made a 38% down, but then it rebounds and it climbs from September to December within 3-4 months to about 91% up. Again, during the tariff Armageddon scare from sort of January to April, we went all the way down, minus 60% off of the price. And then what did ETH do? It made a monstrous run back up to August. Again, 3-4 months right over here, back up to August, but this time it made almost a 3x, a 260% up in terms of its gain. Again, right now, we made a move down. So the October of this year, minus 45% down from its all-time high all the way down to roughly 2,800. So if we look at all the pullbacks together, that 2024 pullback, that 38%, it rebounded 91%. Tariff Armageddon, Liberation Day, minus 60%, rebounded 260% in 3-4 months. And right now we have a 45% pullback. So I expect a rebound from ETH. Now ETH right now, at its lowest point was $2,700. I expect this to rebound at least 1 to 2x, okay? So I at least expect this to rebound and at some point recapturing that 4,800, that 5,000 line within the next 3-4 months, just like these guys right over here. So if we don't have anything else come to market, I expect ETH to rebound well. So next natural question is, what is causing all of this sell-off to occur? Now, there's a lot of theories that are out there, but a couple prominent ones that I see that I want to go over today at least helps me understand what's happening so that I can make my own informed decisions are the following. So one thing is the OG whales that are selling, okay? There's definitely some evidence of it. Is it all the OG whales? Of course not. But some of them are packing their bags, they're going home, they're going on to other things. The next thing is the government shutdown, and lastly, the liquidation event. So let's talk about all of them. So there's definitely on-chain evidence of OG whales selling. If you remember back to July this year, Galaxy helped a whale that was holding from 2011 sell 9.5 billion into the market. At that time, it's 80,000 BTC in the market, and the market actually absorbed that. And we just go over to Galaxy's website. You can see right over here, they posted themselves. They actually helped this whale to sell 80,000 Bitcoins for that $9.5 billion. Now think about it. Back in the previous couple of cycles, selling $100-200 million, that would have crashed the market like no tomorrow. But because of all of the adoption today, we can actually absorb this volume. And the other major whale to sell was Owen Gundon. you can see right over here, you can track all his transaction on Arkham. He's down to 51 cents because he sold the entire stack worth $1.3 billion. Now, the second thing that I think definitely contributed to part of the market's pullback was our government was shut down for 43 days. That was the longest shutdown in history. So when it shuts down, like I talked about in my previous video, there's no spending that's going on. They're building up their TGA account. That's basically their checking account. You know, they have that $9 trillion of debt that they need to refinance. And of course, rate cuts are on the way. So we can clearly see the TGA account, which is the Fed's checking account. Now, if you don't know what this is, go back to my previous video. I talked about it. So during the shutdown, they build up a bunch of cash. It's almost $1 trillion. All that money needs to make its way into the economy. It gets pumped through all of the pipes, the financial pipes, and it takes time, but it is coming. Now, if we look at their reverse repo account, remember, this is the parking lot for excess liquidity that banks have. Up until 2022, you could see during COVID, they built it up. Banks park it with the feds. But after 2022, they drained all of it. So what this means is that when the reverse repo rises, there's a lot of cash within our system. When it drains, there's very little liquidity. Liquidity is tight. So right now, liquidity is tight. The banks have no money to park this with the feds. While we're on the topic of liquidity, if you look at all the central banks of the world, the US, the Bank of Japan, which we know is pumping in liquidity into the market, they talked about this, the European Central Bank, and then other central banks, basically above this line, they're pumping in liquidity. Below this line, they're withdrawing liquidity. Think about it as being QE and QT. Notice right over here in 2020, when we had that massive liquidity pump into COVID, see how Bitcoin, Ethereum, and all the risk assets surge. And then when they pulled that liquidity from the market, you can see we went into a bear market. So we're not above this line yet, but notice they're slowly taking away, or they're slowing down the withdrawal of the liquidity from the system. And our feds have said on December 1st, they're likely ending QT. So expect them, even though they don't go into full quantitative easing, you could see that liquidity is going to start flowing back into the market. And as I always said, watch what the feds do, not what they say. Sometimes Jerome Powell is always hawkish in terms of his speech. But right now, coming up to the December rate cut dates, right now we're at 83% of a rate cut. And if we look at Polymarket, the odds are very similar to the CME as well. And then the last thing that I think has a lot of merit and explains really well why we'd had this major pullback in BTC and ETH from October to November now is the entire liquidation argument. So think back to October 10th when President Trump went out there and he made an announcement. He said he's going to tax 100% tax, those tariff tax on Chinese import. And within hours of that announcement, BTC and all of the alts got obliterated. At one point, BTC was down 18%. Forget about the alts. They were dead in the water before making a tiny recovery. And you recall specifically to crypto, we had a $19 billion liquidation, the largest liquidation in history. And I posted about this comparing it to sort of COVID when we only had 1.2 billion liquidation, FTX crash, which was 1.6 billion. So putting this single day about 16 times COVID and 12 times FTX, that was a major liquidation event. Now let's talk about in big picture and then getting a bit of the details so that you can finally understand how the liquidation event caused this fall. So let's go through a quick summary and then look at some of the details to understand how this occurred. So on October 10th, President Trump made that announcement on the tariffs. As soon as that happened, there was a macro shock. The market went into a frenzy and it panicked. It started selling off. We saw a lot of sell-off and there was a major liquidation. We know that looking at the forensics and looking back in hindsight how bad that was. And everybody remembers that day. Now, as soon as the sell-off started to occur, what happens is when the sell-off is too aggressive, a lot of the centralized exchange, this ADL, this automatic deleveraging kicked in. What it does is it protects the market makers, okay? It starts selling off positions to protect themselves. And by the market makers selling off positions, even positions that used to be profitable, what happens is that liquidity started to evaporate. And then finally, it caused this cascade of forced liquidation. So if you missed that, you must have heard Tom Lee talking about this. He talked about this glitch. And then also a lot of people like Mike Novogratz talked about this very clearly in terms of how the mechanism worked. But let's just go through some of the details so we're all on the same page together. So that example that Tom used that he talked about, he didn't name the exchange, it was basically Binance. So there was a pricing glitch of the stablecoin USDE. Now, usually stablecoins are supposed to be pegged to $1. So when it drops to 0.65 because of a glitch, because of a bug, positions that were profitable were getting liquidated because they used the stablecoin as collateral. This started to spread to other accounts, other exchanges, and before you know it, more than 2 million accounts started blowing up. So these ADLs are auto deleveraging features that exchange uses is when volatility is too high, funds start to deplete, they start having holes in their balance sheet. So this kicks in to protect them. So what happens is there's a forced liquidation on even users who had profitable position. So profitable long short positions get forced out and closed to cover other people's losses. And that's what was happening, and the cascade kept on going on. So you hear Tom talk about it, you hear other people talking about this a lot. So hopefully that gave you a better understanding of what happened that day. And we can see actual evidence of it because here's Binance, they're coming out, they're talking about how they compensated their users $283 million because some of these users, the depegging impacted some of their users who was holding these assets as collateral. So when you hear people talk about this cascade, this is what they're referring to. So some of my takeaways from all of the price action and everything that's been going on is number one is that volatility is not risk itself, but it's actually a component of risk. So we want to get that return. We want to make that return. We have to learn to model and manage that risk. So if you want an asset, for me, I'd rather hold an asset that was volatile and stable over time. That's BTC and ETH, rather than an asset that is stable but continues to go down. That's fiat money. Now, you can't predict every chaotic event. As we could see, even in the short span of a couple months, there's been a lot of chaos and nobody can predict those things. So you have to adjust your risk for that. None of the fundamentals have changed. So for me, I still sleep well at night when I think about my BTC investment, my ETH investment, my BMNR. I have no worries that it's going to continue to go up given everything that is within the market today. So with that said, let's take a look at some of the future price prediction and how I'm adjusting myself for future prices of BMNR. So once we get into Q1 of 2026, 3 months from now, I do believe that ETH will make a full recovery. Remember the last two pullbacks, they rebounded 91% and then 260%. So going back into Q1 of 2026, within a couple of months, I do expect ETH to be roughly 5,000 or more. So if we take that price and we look at everything else remaining the exact same, you could see that the NAV per share will go to $56.74 just on ETH's appreciation. If we get back that 1.3 MNAV, which we traded at that range all along, you could see a $73.76. Now, if we go to Q2, okay, so going into Q2, if ETH makes a recovery back to 8,400, you could see right over here, keeping everything else the same. Now, your dividends are obviously growing, right? Your staking is growing. It's earning at 3%, so that's almost $1 billion. You could see the price is $83.99 or $84. If the MNAV squeaks up to 1.4, you could see $118. And then finally, if we go to sort of the last Q4 right over here, you could see that keeping everything else the same, if ETH gets back to that $11,000, $12,000 at the end of next year, you could see right over here at a 1.6. So we're not even asking for 2.5 MNAV, just getting back to where we are, you could see the shares roughly at $180. Now, of course, nobody could predict the time. We had this major liquidation pullback. Nobody saw that. Nobody could predict the future with the amount of events. So coming over here in terms of my price prediction, I do expect ETH right over here to make a recovery. By Christmas, it should be hitting 4,000, 4,500 or more. We have to scale back because we had those major events. The government shutting down, liquidations, OG selling, and there's many more things, but we have to adjust our timeline. So ETH will make a recovery, and by sort of Q1, I do expect it to 1x, that rebound within 3 to 4, at the end of Q1, 3 to 4 months, we should be able to round back. And then BMNR itself should go to roughly $50 in December, making its way to $73, $118, $180 like we calculated. Here are the percentage change for ETH, and here are the percentage change for BMNR. Now, of course, BMNR, you should be able to get a premium on ETH. Roughly, it was trading at 1.5 to 1.7. Sometimes it traded up at 2. So I do expect these prices to go forward. Now, unfortunately, a lot of people who are investing or day traders, or some or even degenerate traders, they come in with the mindset that they need to be able to get 100, 200% out within 3 months. Now, remind you that BMNR has only been operating as an Ethereum treasury company, as a DAT, for the last 4.5 months. There's no company in the world that you expect to squeeze 200% out within the last sort of, 120 days of trading days. So you have to have a long-term mindset. If every time people applied these same concepts, these same ideas to Ethereum, it would have died out a million times already. So every time ETH went to, 1,000, 1,500, it went down back to $160. Every time it went to 3,000, it rolled back below $1,000. Last time it went to 48, 4,900. During the bear market, it rolled back to $1,000 line. So every single time they get hit, they give up right away and they leave. So if you're in this day trading mindset, I don't think, and with all due respect, I really don't think that trading underlying assets that are extremely volatile is for you. It's better off doing index funds and other things where it helps you sleep at night. But when you're in these volatile assets, the number one thing that will separate a winning trade from a losing trade is simply your patience and your ability to do nothing when you have this volatility. So if you enjoyed today's content and learned something from it, please consider subscribing, and I will see you guys next time.